Well, good afternoon, everybody, and welcome to TradeStation. This is Michael Burke. I head up client education and the masterclass channel here at TradeStation. And I want to welcome you to another edition of our Art of TradeStation series. I love doing these events. These events are designed to showcase some of the most powerful features of the TradeStation platform and how you can tap into those features and how you can customize TradeStation for the way that you trade. Today's session is one of my favorites. It is strategy development and backtesting without any programming. And we'll get started with that in just a moment. If you have any questions during the presentation, please, if you're viewing this on YouTube, you can join our Zoom to ask questions. But if I don't get to your question or you have a question that's off topic, please feel free to email me. My email address is mburke@tradestation.com. It's also on the last slide of the presentation. Is a link to my PowerPoint and a workspace that I'll be showing you today. So if you want those materials, you can download them from that zip link. All the videos that we do here at TradeStation are archived and go up on YouTube within a day or so. And with that archive, there's a description. And in that description, there will also be a link to that zip file that has the PowerPoint and the workspace. So don't worry, you'll be able to get those resources really easily. Keep in mind that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed are for educational purposes and are not recommendations. Active trading is not suitable for everyone, and you can find additional disclosure information on the TradeStation website. For those of you who are just getting started with TradeStation, you need to check out our Getting Started channel, which is hosted on our affiliate, youcantrade.com. Here you can find many quick start videos, platform tours, downloadable workspaces, all kinds of stuff to help you get started. It's a great way to jumpstart your trading with TradeStation. And if you're looking to up your TradeStation game a little bit, Masterclass is also a channel that's hosted on our affiliate You Can Trade. And it's modeled after our very popular in-person Masterclass. We used to do a deep dive week of immersion training in TradeStation and easy language and strategy trading here in our corporate headquarters in Florida. Obviously, we're not doing those now, but this is the next best thing. You can join Masterclass. There's a ton of great videos, premium courses. You get access to all of that for free, and you can take a 14-day free trial to check it all out. It's $59 a month after that. So check out Masterclass. Okay, so our agenda today is to talk very briefly about what strategy trading is and how it can help you. What is that process? And then I'm going to show you how you can test many of the indicators that you're probably using right now without doing any programming. Built into TradeStation is a library of what we call strategy components. Each component takes one trading action, and I'll talk about that a little bit later, but you can put these components together into very elegant strategies with going long and short, with money management rules, all kinds of stuff. So I'll show you how to do that, and it doesn't require one line of programming. While we're in there, we might as well look at the performance report and how to measure the performance of a strategy. So we won't spend a lot of time on that, but I'll give you some key things to look at when you're analyzing the performance of a strategy. And I'll also kind of touch on optimization a little bit so you can get a feel for how you can do scenario testing with the different inputs that make up some of the calculation rules of your strategy. So we'll go through all of that. A lot to cover. We'll probably go a little longer than the 60 minutes that we're scheduled for, but bear with me. There's a lot to cover here. So let's just kind of all level set for a moment here. What is a trading strategy? So a trading strategy is a historical tested set of rules for entering and exiting the market. Those rules are typically based on technical indicators and patterns, and it's done in a chart so that you have historical data. And basically on each bar, we evaluate the rules, see if there's an opportunity to enter or exit based on those rules. And then there's exit rules once we're in a position. Those exit rules can be technical or money management or just about anything. Once you have a strategy, you're going to look at the performance of that strategy. How did it perform with this symbol at this interval during this period of time in the historical record? A lot of people test their strategies from the current day back 2 or 3 years, but as you develop these skills, you're going to want to test your strategy on different windows of data. So that's one thing that TradeStation can do. It can build a chart that just looks at, say, 2006 to 2010, and you can test your strategy in just that time period. Or if maybe you're an intraday trader and you want to test your strategy from, say, the beginning of March to the beginning of April this year and see how your strategy would have performed in that environment. So lots of different ways of looking at your rules in a TradeStation chart. And with the flexibility you get with TradeStation for intervals and symbols and historical data and all the tools built in, you can really build some really elegant strategies and test them in just an almost unlimited number of scenarios. So when you put the strategy in the chart, it marks on the chart everywhere you would have bought and sold or exited, and all of that information is compiled into a performance report, which I'll show you here. Each strategy component is, like I said, is based on technical analysis. So there's probably some inputs associated with it. So if it's a moving average strategy, you can adjust the moving averages, the length of those moving averages, and optimization gives us the ability to try many different moving average parameter scenarios very quickly and look at a comprehensive report of all the different scenarios in one view. Strategies in TradeStation are typically built on time-based charts, minute charts, daily, weekly, monthly, that kind of thing. You can also build them on activity-based charts, which are based on volume or the number of trades that occur on each bar. And that's typically how strategy traders look at testing their ideas is using time or activity-based charts. And finally, the only other thing you need to know here is that a strategy can only trade the symbol that it's applied to in a chart. And so it applies to the data 1 symbol, or the symbol that created the chart. That's the symbol that a strategy will trade or test. And of course, once you have a strategy that you have confidence in, TradeStation lets you automate that strategy so that you can say, look, make these trades for me automatically in either the simulator where you can test it for a little while, and then eventually move it to your real money account where we'll make those buys and sells right in your real money account, hands-free. This is true program trading. You can have as many of these kinds of charts running and automating as you need for your trading. So it's really incredible technology. So the reason that traders look at their trading ideas like this, the reason they build rules around their ideas is so that it becomes a less discretionary way to trade. It becomes like following a trading plan, right? We're actually following our rules. In fact, the computer, if they're making those trades for us automatically, we're really following our rules. That's really a trading plan now. But even if you trade it manually, even if you wait for the strategy to give you the signals and you go to the matrix and place the order, it is still a much more non-discretionary approach to trading, which of course is going to help reduce your emotional load while you're trading. That's one of the things that get traders in trouble the most is, when should I get in and when should I get out? And they're worried about their account. They're worried about the risk. They're wondering if they're leaving profits on the table. All of those emotions, work against you when you're trading. And the ability to test your idea, to understand what the realistic expectations for profits are. Many traders come into this, into this endeavor thinking that they're going to make a lot of money. They have an indicator and they have unrealistic expectations of what the risk is, what the potential profit is. And a strategy lays that out for you very nicely. If you're going to get in here and you're going to get out here, and you look at what happened over the last 2 years, you get a really good understanding of what the profit potential is and what the potential risks are and what the potential drawdowns are. And so now you come into this game with a lot more information, and you can make better decisions with that information. Even if you don't automate your strategy, you have better information about the ideas that you want to trade, the ideas that is around your methodology. I think one of the things that has helped me the most in my time in trading is that the process of strategy evaluation, building strategies, looking at them historically, seeing how the indicators interact with the price action. It makes you a more intuitive trader. You get a better, deeper understanding. There's a muscle memory to this, where you're watching MACD or you're watching stochastic, and over time you start to realize how that interacts with the price action, that the price action is creating the movement in these indicators. And we're not trying to predict what's going to happen, but we're trying to figure out a better way to react to what's happening, right? And the ability to backtest and look at different ideas on different time frames, different indicators, it's incredibly valuable to give you that experience and to give you that deeper understanding of how things work. It has been for me. So we're going to be working with strategy components. Strategy components are built into TradeStation, and they're based on most of the popular technical indicators that you're probably using every day. So each of these components is going to take one trading action. So one of these components, and for example, let's say something like MACD. So MACD is going to have two components. It's going to have an entry component, and it's going to have a short component, both long and short. So two components. The long entry, MACD, gives you the ability to go long a new position based on the MACD rules, or it can add to an existing position if you're already long. A sell short component does the same thing. It will go short, or will add to a short position if you're already short. So we call that scaling in, right? I get in at one price, the market moves up, and I get in at another price. I get in at another price, so I can scale in or pyramid in. By default, you should know that TradeStation doesn't let you do that. If your strategy says buy, and then the strategy says buy on the next bar, it's only going to take that first buy. It's going to ignore the second one unless you turn this feature on. It's a safety catch. So you can only go long one position at a time unless you have scaling in or pyramiding turned on. So that's a safety catch. So if I have a strategy that goes long and short, that means that the strategy may also reverse. So if I don't have any other criteria or any other components building my strategy, I just have a long component and I have a short component, that strategy is going to reverse. And so what happens is that if I'm long and then the strategy says sell short, it closes that long position with one order, and then it generates a second order to go short. So when it reverses, there's actually two orders happening: the closing of the long position or the short position, and then going long or short the new position. Now with trade size, it's really important to understand that no math is done here, right? So if I'm, especially in the futures world, if I'm short 3 E-mini contracts and the strategy says to go 5 short, so I'm long 3, the strategy says go short 5, it closes those 3 long positions in their entirety and goes short 5. So it doesn't net it out. No math is done. Whatever the order is, TradeStation is just going to send that order to the market. And that's why we generate 2 orders there. There's also components that just exit a long or short position. So a sell is a long exit. Sell does not, by the way, generate a new short position. Sell is only used to close a long position. So if I'm flat and the strategy generates a sell order for some reason, nothing happens. It's ignored because there's no long position to close. Same thing with buy to cover. Buy to cover is a short exit. It only exits a short position, can't enter a new position. So when you start thinking about your indicators as trading rules, you're going to go through a process. There's a development process that everybody goes through when they're trying to develop a strategy or develop a methodology. And even though you may not think that you're a strategy trader, you are in fact a strategy trader. If you look at indicators and you look at the price action and you try to figure out where the best place to get in and out of a trade is, or where to go long or short, that's the process of developing rules. And strategies are simply those rules. The other thing is to think about this like you would think of any other scientific experiment or endeavor, right? There's going to be an iterative process here. We're going to start out with a hypothesis, and then we're going to try to prove that hypothesis. And if it doesn't prove out, we're going to change some of the variables and test that. And so it's an iterative process here. So the first thing we're going to do is we need to visualize the idea, and we do that with indicators. We're going to put indicators into the chart, and we're going to start looking at the indicators against the price action. And we're going to make observations on how that indicator behaves and how it matches up and where we should get in and where we should get out. So we're going to make those observations, and that's where we start creating those rules in our mind. This is where I want to get in, and this is where I want to get out. And that is where the strategy process then generally moves to the programming stage, where you're going to program that strategy in easy language and then put that strategy on the chart and backtest it. So we're going to bypass that in this session. We're going to use those indicators and the most popular way to use those indicators. Those rules are already built into strategy components that come with TradeStation. So you don't need to do anything as far as programming goes. You're just going to put these puzzle pieces together, these building blocks together, and test that idea. So once we have that idea in the chart, we're going to look at the performance of that chart. We're going to look at the risk. We're going to look at the tradability of that. Tradability is a concept of the psychology of an idea. In other words, some strategies may look like they are good performers, but they're not tradable because the drawdowns are too big, or they have too many consecutive losing trades in a row, or too many consecutive weeks of losing trades in a row, things like that. So you might have a good strategy that performs well, but it's not tradable because you wouldn't be able to psychologically trade through those drawdowns. No matter how good the strategy looked, when a strategy loses 6 trades in a row, you're very unlikely to make that 7th trade. And if you can't make that 7th trade, then you don't have a strategy. So we always look for those performance measures that not only show us the profitability and the risk, but also the tradability. And I'll point out a couple of those when we get into the performance report in a minute here. So if it's not tradable, if the performance doesn't look good, we go back to the drawing board and modify the rules, modify the conditions, modify the symbol, the interval, the amount of history. We modify all of these things until we get to a point where we have a strategy we think is pretty solid. And then we can experiment with the input parameters and try different scenarios. So optimization gives us the ability to set a range of input values. TradeStation is incredibly optimized to do that kind of work. And when you put that into the chart, it can go through those, many of those scenarios, hundreds or thousands of scenarios in just a few seconds or a few minutes, and then give you a comprehensive report of all those different scenarios, all those different optimization runs. And eventually we end up with a strategy that we're either going to trade by watching the chart, or we're going to trade by letting TradeStation make those trades for us. And we're always going to want to forward test an idea before we risk our money. So the great thing about TradeStation is you can put that strategy in the simulator, let it run for a few days, a few weeks, make sure the performance in real time matches the historical performance. And then at that point, you can start trading that strategy. So as I've said, we're going to look at the built-in strategy components. I have a strategy example I'm going to share with you today. It's a key reversal strategy based on some of the components that come with TradeStation. The reason I enjoy showing this particular strategy is because it's one of the very first strategies that I learned when I came to TradeStation almost 30 years ago. So the founders of the company were obviously promoting their software. This was before we were a broker, we were just a technology company back then. And they would travel to trade shows and around having seminars talking about their software and the ability to backtest. And they always used a key reversal strategy. And it's always stuck with me. And it's a strategy that holds up well in a lot of different markets, even after 30 years. So I'm going to share that with you today. And we talked about how each of these components takes one trading action, right? So there's no complete strategies in TradeStation. If you want a complete strategy, you have to write that strategy yourself, or maybe lease a strategy from one of the developers in the trading app store, which offer complete strategies that you can download and trade. Or you can use these components. Each of these components takes one action. You must have at least two strategy components, or at least two rules for either entering and exiting or entering and reversing. So at the very minimum, you're going to have at least two components, either a reversing idea or an entry and an exit. A couple of things to think about here. A lot of traders who start this process think that they have to create a strategy that goes long and short. So they want a strategy that goes long when the condition says go long, and they want a strategy that goes short when the condition goes short. But in the way that the stock market, has been trending over, the last 100 years, trending up, a lot of times short trades don't necessarily help your strategy. So don't tie yourself to the fact that you have to have a long short strategy. In some markets, a long-only strategy is fine. You go long and you get out at some point and you ignore the shorts. And maybe there's a market that you're trading where going short is the best way to approach that. Maybe you're a futures trader, you're trading a commodity that's trending down over the long run. You only go short, you don't go long. So just throwing that out there so that you don't necessarily bang your head against the wall trying to create this long-short strategy in an environment where that doesn't make sense. Just go long or just go short. So we're still in PowerPoint here. This is the Add Strategies dialog in TradeStation 10, and you'll notice here all of the different strategy components, and each one has this suffix here that tells you what the trading action is. So long entry is LE, long exit is LX, SE is short entry, SX is short exit. And you can also see in the grid over here what trading action it takes here. So in a chart, we're going to right click, we're going to say add strategy, we're going to come to this dialog, and we're going to select those strategies that we want to put together into our overall strategy. You can hold down the control key on your keyboard and multiple select within this dialog. There's a great box here to learn the definition and to get some information about each of these ideas. You can also Google any of these concepts, and there's all kinds of great information on the internet on how the indicator was created and how it's used and the different ways people use that in their trading. So lots of great information out there, right? Let's go to the next slide. So here I've added the MACD long entry and the MACD short entry to the chart. That's going to be my strategy. It's a reversing strategy, no other exits. So just long, short, long, short. You can see the input values for MACD. So those are the same input values that we would have in the MACD indicator by default. So definitely we want to have that MACD indicator in the chart so that when we click OK here and the strategy starts calculating, we can look at the MACD and see how the orders for the strategy match up with the indicator, just to make sure that the orders are being generated where we expect them to be generated. If you want to adjust those inputs for any strategy, you use the Customize button up here in the upper right. So that takes you to that particular highlighted strategy component, and you can go in there and you can change the input. So if you don't like 12, 26, and 9 for MACD, you can change that to whatever you want. And you can also optimize it inside of that Customize. You can optimize multiple components at the same time. Just remember that if you're going to change these inputs, you need to change the indicator in the chart as well so it matches. You don't want to have the indicator having one set of parameters and then your strategy having a completely different set of parameters. Properties for all over there on the right allows you to do things like set the trade size or turn on scaling in or pyramiding. We talked about that. And you can also factor in things like commissions and slippage as part of the performance costs that will be factored into the performance report. So this is that inputs tab, and you'll notice that I can come in here and change any of those input values. Here's the optimize button right here. There's also a calculation tab. That calculation tab tells the strategy to trade either when the bar closes or to calculate tick by tick. And that is a topic that would take an hour all by itself. So we're not going to cover that today, but at the end of this presentation, I'm going to show you an opportunity where you can go and take my 5-hour strategy development course free as part of the masterclass trial. So I'll talk about that a little bit at the end of the session. So if I click properties for all now, here's the properties. And so in the upper right, I can turn on pyramiding or scaling in. So if I want to get in at one price and then get in at another price a little bit higher, that's where I can do that. And the bottom is where I can set my trade size. So typically, if I'm a futures trader, it might be 1 or 2 contracts. If I'm a stock trader, 200, 300, that kind of thing. And then in the upper left is where I can factor in commissions or slippage. I can set how much money I have in my account for some of the different risk measures, what the risk-free interest rate is. That's high. 2% is a little high nowadays, right? And, oops, sorry. And then here in the bottom left is I can turn on a feature that allows for a finer resolution of backtesting when I'm using intrabar order generation. And again, that would take, we're not going to talk about that today, but that is something that you can definitely learn more about as you get a little more experience and you start wanting to do more advanced things here in strategy backtesting. So just a couple of quick best practices. We've touched on some of this already. You should always have the indicator that the strategy is based on in the chart. You always want to be able to visualize why it's buying and selling in the chart based on the indicator that that strategy is based on. Also, TradeStation has a great indicator called the strategy equity indicator. And if you put that into the chart, it will give you the equity curve of your strategy bar by bar. So you don't even have to bring up a performance report to scroll back through the chart and see where the strategy performed well, maybe where the strategy didn't perform so well, that kind of thing. And so that is an equity curve bar by bar that you can put right into the chart. It's the same equity curve that you would see in the performance report, which I'll show you here shortly. But it's nice to have it in the chart there, and you can see exactly what's happening. The other nice thing about that is that if you make tweaks to your strategy, which you will, as soon as you make that tweak in the input parameters, you see that equity curve change immediately without having to go to the performance report. So that's very handy. Okay, so we're going to go to TradeStation, and I'm going to show you the key reversal pattern strategy that I learned almost 30 years ago. We'll do a performance evaluation of that idea. So we'll kind of look at the strengths and weaknesses of that particular strategy in the chart that we're looking at. We'll also talk about the fact that the strategy is applied to a chart, and that chart is the laboratory. The chart makes the analysis. So the symbol, the interval, the amount of history, all of those factors determine what we're doing. Remember, this is a laboratory experiment, right? We're trying to figure out the best results. So all of these different parameters, the indicator, the parameters for the indicator, the symbol, the interval, the amount of history, all of those factors are things that we can adjust to come up with the strategy that hopefully we will eventually trade. So we'll look at the performance evaluation, and I'll show you a little bit of how optimization works as well, and then we'll finish up. Okay, So whatever idea that you're trading, whether it's MACD or stochastic or Bollinger Bands, you should have a good understanding of why that indicator exists. What is it designed to do? And what are the typical rules for that particular indicator? Now, I will tell you that I always encourage my students and our customers to think outside the box. Just because somebody is using MACD in one particular way doesn't mean you have to use it that way. A good example of that is the RSI indicator, which is a Wells-Wilder concept. And I don't know if you know that indicator or not, but it's like stochastic. It's an overbought, oversold oscillator, and it has two levels to determine overbought and oversold. So overbought is at the 70 level. So it's an indicator that goes from 0 to 100, right? And then it has an oversold indication at 30. And so I've kind of taken that and I've changed it to the way that I want to look at it. And I don't use 70 and 30 at all. I use 50. And instead of using it as an oscillator, I use it as a trending confirmation or filter in my trending strategy. So if it crosses above 50, I consider that bullish. And if it crosses below 50, I can consider that bearish. So that's the kind of thing that I want you to start doing. When you look at indicators, certainly you should understand how they work and the normal way that people are looking at them and trading them. But what do you see? And what rules can you derive based on that indicator and the interaction of that indicator with the price action? So a key reversal is a simple bar pattern that signals a reversal of the trend, typically. And it can be used on pretty much any bar interval, but it's better on less noisy bar intervals, like 60-minute charts or daily charts, that kind of thing. It's very noisy at 1 minute and 3 minutes, probably not designed for that kind of interval. It's basically, I use it on a daily chart, to be honest with you, most of the time. Sometimes a 60-minute chart or 120-minute chart. So that key reversal is an indication that the market is either pausing, consolidating, or reversing. And those key reversal bars tend to be good support and resistance levels as well. So think of it this way. In an uptrend, prices are hitting new higher highs. And then one of those new higher high bars closes lower than the previous close. That's the key reversal. Higher high, lower close. And I typically look for higher highs that have been the highest high for the last 8 bars, 13 bars, 21 bars, something like that. So that it is a significant higher high. And that's a key reversal down. So in a downtrend, as prices hit new lower lows, when we get a bar where the close is higher than the previous close on the same bar, that's a key reversal up. Same concept. I'm looking for significant lows, the lowest low of 8 bars, 13 bars, 21 bars, something like that. We can test all of those scenarios to see which one performs the best. So there's the idea. We have a lower low, but we have a higher close. Lower low, higher close, that's the key reversal bar. Key reversal down, we have a higher high. You see that wick is higher, but we have a lower close. Key reversal down. When can we get into this trade? When that bar closes, when the market closes, that bar closes, we confirm the signal, and the soonest we can get in is at the open of the next bar. All right, let's go to TradeStation. So here's that key reversal idea already applied to the chart. A key reversal short is identified with this little red down arrow. If it's a losing trade, it's a red dotted line. And here you can see we hit our stop loss. So in this chart, I have my key reversal long entry, I have a key reversal short entry, I have a profit target, and I have a stop loss. So this is a long short strategy, and it has a bracket profit target and stop loss. So here you can see that we went long here at that point, and that was a winning trade. That's a blue dotted line. And TradeStation goes through the historical record here. This is 5 years of daily data on the SPY. And it applies those rules to every bar and buys and sells based on those rules. All right, let's take a look at, let's kind of zoom in on one of these trades so you can see what's happening here. So here's a key reversal that ended up being a losing trade. So let me kind of just zoom in here. There we go. So here's the key reversal bar, and applied to this chart is the key reversal show me indicator. So there's a key reversal show me indicator that's blue when it's a key reversal up, and there's a show me that's a key reversal down that is magenta when we get a key reversal down. So that's a show me indicator. And I'll show you how to apply those here in a moment. So here's our key reversal bar. We have a lower low, but the close of this bar is higher than this bar. So that gives us an opportunity to go long at the open of this next bar. And that's what we do. Same thing on the short side. Here's a key reversal short right here. So that's the key reversal short. We have a higher high, but we have a lower close, and we get in at the open of that next bar. All right, so I'm going to right click, and the first thing we're going to do is we're going to look at the indicators that we want to insert into the chart. So I always start off with indicators. So this is going to be studies and add study. And that key reversal pattern is a show me. It's not an indicator. So show me's put dots on the bar everywhere a condition is true. It's like historical alerts. And here I have a key reversal up and a key reversal down. I can hold down the control key and select both of those. And then I click OK, and it adds it into the chart. The other thing I want to do is I want to go to Studies and Add Study. And this time I want to add my strategy equity indicator here that you see at the bottom. So when a strategy is applied to the chart, the strategy equity indicator will show you the profitability of that idea historically within the chart. If you don't have a strategy applied, this will just be 0. So here's the strategy equity indicator, and I can add that into the chart. So if I scroll through the chart here, you can see that the strategy has had periods where it was underwater, mostly underwater. There's a little, it was okay at the beginning there, but it gives us an idea, and we can look to see, okay, here the strategy, how did the strategy do? And so here we had a larger losing trade that closed right there. And notice how the strategy equity indicator adjusted at that point, and it included the loss of that trade in the equity curve. And then we had a couple of winning trades. We had a winning trade here and a winning trade here, and the equity curve recovered a little bit. In fact, it recovered quite a bit over this period of time. So that gives us the ability to kind of see how the strategy does under different market conditions, maybe different volatilities, that kind of thing, but we can see it right in the chart. So to add the strategy to the chart, I'm going to right click, and I'm going to go to Studies, and I'm going to go to Add Strategy. And so here are all the strategy components that we talked about. Almost all of the popular technical tools are here, Bollinger Bands and Keltner channels. There's our key reversal. This is what we're going to add to the chart. There's MACD, stochastic, momentum, moving averages. All of those are here. What's also here, by the way, are money management exits. Here's a profit target. That's just a fixed profit target, either in dollars or points from the entry price. There's a stop loss. There's trailing stops. There's time exits, which allow us to just get into a trade and then exit 3 bars later. So lots of different ways of entering and exiting here. But for this strategy, what we're going to do is we're going to select our key reversal long entry and short entry. And I'm going to come down, and I'm going to keep my control key held down because I'm going to select the profit target, and I'm going to select the stop loss. So I can select all 4 components that I want to be part of this strategy all in one action. I'm going to click OK. And if we go to strategies, edit strategies, we can see those 4 components in the chart. Now I've adjusted these a little bit for the way that I look at the key reversal on the daily SPY. And so if I click on customize here, you can see that I'm using a 21 bar look back for the lowest low or the highest high of the key reversal. So that's a pretty significant higher, higher, lower, low. It's got to be the highest high or lowest low of 21 bars. 21 bars is one of those numbers that is used often in price channels. So there's a madness, there's a method to my madness here by choosing 21. But for different markets and different intervals, that might be a lower number, that might be a higher number. That's the beauty of this whole process, is you can try different values and see how they perform. I also have in here a profit target and stop loss that I have set at 20 points. So that's 20 SPY points over here on the y-axis. So if I get in at 100 and the market drops to 80, I'm going to get stopped out. So that's the idea here. So 20 points. This is a $300 instrument. So 20 points. That's, about it's not quite 10%. It's about 17.5%. Is that right? Yes. No, 7.5%. So that's the idea. And those are the components that make up the strategy that you see in the chart, that make up this performance. So to look at that comprehensive performance report, we're going to go to data and strategy performance report. But you can only see that strategy performance report, remember, if you have a strategy in the chart. That'll be grayed out if you don't have a strategy in the chart. And everything I'm showing you here, whether you're on TradeStation 10 or 9.5, all of this functionality is the same. This is the same functionality that was in TradeStation 9 and 8 and 7 and 6 and 5 and 4. This is all the same functionality, the same. None of the principal ideas here have changed. It's still the process of building rules and testing those rules. It's just that we've been at it here at TradeStation for a very long time, and there's a lot of nuance and a lot of experience that's built into this technology at this point. So here I'm going to click on the strategy performance report. And it takes all of those trades in the chart and it builds this report. And the report is made up of a number of tabs here along the bottom. And we'll look at some of those, but typically what we want to look at is this performance summary, which is the first page. And there's a button here that says expand or collapse. So when you click that, there are some additional, more advanced analysis of some of the same fields. I typically don't use those because generally when I'm evaluating my strategy, I'm in laboratory mode. I'm just looking for quick, snippets, hints of how this is performing. And once I have something that looks promising, then I'll drill down into the performance. I'll drill down into some of the rules a little deeper. But right now, what we want to do is we just want to get a kind of a snapshot of how this strategy has performed over the last 5 years on a daily chart of SPY. And you can see that the long trades have done much better than the short trades. Remember I said you don't want to beat your head against the wall with short trades if you shouldn't. Here's a good example of that. The long trades have done pretty well, but the short trades, took away almost all of that profit. Notice that the long trades were right 85% of the time over the last 5 years, and the short trades were only right 21% of the time. So why would you be making those trades? One of the key things that I look at is this average trade net profit. What that does is it's an expectation of profit per trade. So in other words, if I make 100 trades, on average, each of those trades is going to net me $75. And I have to determine whether that's enough for the amount of money that I'm risking. I also want to look at things like the ratio between the average winning trade and the average losing trade. That ratio compared to, when you look at that in comparison with the percent profitable, that gives you that expectation of profit. So I want to know what those ratios are. A little earlier, I talked about whether the strategy was tradable or not. And one of the things for me is consecutive losing trades. I think that's one of the key factors in any strategy that I evaluate. That the number of consecutive losing trades can't be more than 2 or 3 or 4 at the most. And so that's one of the things where my eye goes to right away, right here. How many consecutive losing trades did I have during the 5-year period? And notice that the long trades only had 1 consecutive losing trade. In other words, I never lost 2 trades in a row on the long trades. The short trades lost 6 trades in a row, right? Now keep in mind that overall, that we only had 3 losing trades in a row. So those six short trades weren't consecutively. They were mixed in with some winning trades or losing trades with the long trades. So the most we ever lost at one time was 3 trades in a row. And that's not bad. But that's a number you have to really think about, because if that number is 5 or 6, it's really tough to trade through 5 or 6 losing trades. You start losing confidence in the strategy. You start losing confidence in the idea. And so even though all the other numbers might look great, it's very profitable, high number of winning trades, low drawdown. The problem is that if you have 5 or 6 losing trades in a row, are you going to be able to trade through that? And some of you might be saying, well, if everything else looks great, sure, I can trade through that. That's no big deal. But when you actually live it, it's not so easy to trade through. So just something to keep in mind. One of the interesting performance measures here in the performance report is the RENA index. So RENA doesn't stand for anything. It's just a made-up name based on the creator of that concept. That's actually his daughter's name was RENA. And what it is it's a risk score, so that you can compare this strategy to another strategy, or you can compare this scenario in the chart to a different scenario in the chart. Maybe I changed the profit target or stop loss, or I changed the inputs for the look back period for the key reversal. Any tweaks that I make to the strategy, I always come in here and look to see if RENA went up or if RENA went down. If RENA went up, then I improved the risk reward ratio based on time in the market for that strategy. And that's what you want. You want that number to be going up as you make tweaks. It's not a number where you can say, 30 is a good number or 100 is a good number. All this is a comparative score, so that I know whether this tweak was better than the original. And that's what that score is for. There's drawdown information here. You can see that we have a pretty good drawdown here, $7,000 drawdown intraday on $2,000 in profit. That's quite a bit there. But of course, that's hurt primarily by those short trades here. So drawdown is based on 2 concepts, either bar by bar drawdown or closed trade to closed trade drawdown. And you want to watch the intraday bar by bar, because that's what you're living. You're living that bar by bar drawdown. You're not living it closed trade to closed trade. You put on a trade, you hide in the closet until the trade closes, you come back and look at the performance. Nobody does that, right? Everybody's at their computer watching the trade bar by bar. So that's the drawdown that we have to pay attention to. And that's calculated based on the highest equity peak during the equity curve. So as the strategy is going up, wherever it hits an equity peak, wherever it draws down the farthest from that equity peak becomes the drawdown number that you see here. And remember, we develop this strategy and then we start trading it moving forward. It's not going to necessarily continue on exactly the way it did in the backtest. So we have to look at the backtest to kind of get a gauge for what the profit potential is, and here where that drawdown risk is, gauge that drawdown. So we have a realistic expectation of both. There's some advanced analysis here for each trade. There's a trade by trade list, so you can see every trade that's in the chart. But the performance graphs kind of tell the best story, right? The performance graphs are telling us, how did that strategy behave over the historical back record? You can see that we had a really sharp drawdown here, and then the market moved forward from there. This is the closed trade to closed trade equity curve. And the little green dots you see here are the equity peaks. So drawdown is measured from that peak to that lowest point. There's a number of drawdowns here, but that's the biggest one, and that's the number that we saw in the performance summary. Here, though, I can also select the day-by-day detailed equity curve. And here's what that equity curve looks like bar by bar. And again, that's still the biggest drawdown right there. All right, so let's tweak this a little bit. I'm going to right click and go to Studies and go to Edit Strategies. And the first thing I'm going to do is I'm going to stop making short trades. So here I can highlight that key reversal short entry, and I'm going to turn off going short. I can either turn it off or I can leave it on as an exit only for the long. It won't go short unless I have it on. But if I say exit only, if it hits this rule, it'll exit the long, it won't go short. So I'm going to leave my 21 bar look back for the long entry. But I am going to show you how you can optimize the bracket order. So here I'm going to select the profit target and click Customize. I'm going to highlight that 20 and click the Optimize button here. This allows me to set a range of values to optimize. And I don't believe in optimizing every single possible iteration of that scenario. I generally do it in kind of bigger blocks. I don't want my strategy to be reliant on whether the stop loss is $19 or $20 or $17.50 or $17.75. That doesn't make sense to me. So I look at big blocks, big numbers, and then once I have something that I think is robust, then I might try to fine tune it a little bit. I'm not going to over fine tune it, but I might fine tune it a little bit. So here I'm going to go from 5 to 25 in increments of 5 for the profit target. Click OK. You can optimize multiple components and multiple inputs at the same time. And here, same thing. I'm going to go from 5-point stop loss to a 25-point stop loss in 5-point increments. So that is 25 tests. It's going to apply each test to the chart, recalculate, store the performance, and then compile those 25 scenarios into a report that we can look at. So keep an eye on our net profit over here. It's about $2,000. The RENA index was like at 5. So we'll take a look at that when we go into the performance report. I'm going to click Optimize. And so we see that definitely improved it, but this is primarily because we're not short anymore, right? And here you can see we're only going long. There's a long trade. There's a long trade. We're only going long. Notice there's not that many trades either. That's a bit troubling because generally you want to have a good sampling of trades, typically 30 or 40 trades. And in the last 5 years, this key reversal based on these scenarios, it just didn't generate that many trades. So let's look at that optimization report. I'm going to go to Data again and Strategy Optimization Report. So here's that Strategy Optimization Report. And if you don't mind, I'm just going to take a minute to oh, it's not letting me do that now. Why aren't you letting me do that? So here I'm going to go to Customize Window and just make the font a little bit bigger so you guys can see it. There we go. It's a little too small there a moment ago. So there's their 25 tests. And I can sort all the scenarios by the net profit. See which profit target and stop loss scenario performed the best here. I can see that it made it between 13 and 15 trades. And I can see that the percent profitable ranges anywhere from about 50%, 40% even here, up to 85% where we are here. Even the 40% scenario still made money. Didn't make a lot of money, but it still made some money. And although I don't have the RENA index here, I do have a similar performance measure called the TS index. So if I sort on that, then I can see actually that the most profitable scenario wasn't the best for risk reward. It was this one, the 2020, which we had already. And so that's something good to know, is that you don't always have to pick the one that makes the most money. You want to make the one that has the best risk reward, profile, the one that has the lowest drawdown, those kinds of things. In fact, you can sort over here by drawdown and see which of these scenarios have the lowest drawdown. And do you want to give up some profit so that you have a less risky strategy? So these are all the kinds of things that you can think about here. So if we go back to that performance report, now that equity curve looks a lot better. That's the kind of equity curve that we're looking for, right? Right there. And so what you end up with is, and again, obviously this is a bit staged because I kind of know the results going into this presentation. But the point here is that if this doesn't look like an equity curve that we would trade, we can go back to the drawing board and we can try different scenarios. We can try different parameter tests, and we can do all of those kinds of things and build up that strategy. And most of the time, I have to tell you that I have an idea for a strategy and I spend, I'll spend hours on it, and I just can't get over that threshold where I think this is something that I can turn into something that's tradable. Most of the time I throw stuff away, and very rarely do I have something that, just pops out at me right off out of the bat, where something goes into the chart and right away it's like, oh, this is a great strategy right out of the box. That rarely happens as well. Coming up with a good strategy that's robust, that matches your risk reward profile, that matches your time frame, that makes sense to you, that you'll have confidence in, that you can follow through with, that takes work. And TradeStation gives us the ability to do that work, which is just incredible. So to bring up either the optimization report or the strategy performance report, remember you have to have a strategy in the chart, and you can bring up the performance report right there, and you can bring up the optimization report only if you've run an optimization. So this will be gray unless you've run an optimization in that. So remember, you go to Studies, Edit Strategy, and you can optimize any of those input parameters. So things you need to know about this, right? First of all, we didn't talk about how the strategy calculation engine works, and that's really important so that you can determine whether you want to use intrabar order generation or close of bar evaluation. So all of those kinds of things you're going to have to learn more about in order to get to a point where you have some confidence in your strategy. We just briefly touched on the performance, but I have to tell you that most of the things we just talked about, those are the kinds of things that I look at primarily. We touched on optimization, but there's other best practices. The goal of optimization is to find a robust strategy, not to find necessarily the best scenario. That best scenario probably won't work as well moving forward as it did in the backtest. The concept of curve fitting comes in here. But we use optimization to verify our idea. Are a majority of scenarios profitable? Is this a robust idea? And of course, once you graduate from using components, you are going to need to know a little bit of easy language, or you're going to have to hire a easy language consultant that can help you, put your ideas into TradeStation. Okay, so to that end, next week, I'm the host of Masterclass all week, and I'll be doing a 5-session learning how to write strategies in easy language. And if you don't have any easy language experience, then I can't suggest that you come to this class. You really need to have a foundational understanding of easy language, which is available in the masterclass for free, which is my easy language boot camp, which is a 5-session. It's about 7.5 hours. Once you go through that course, you have to do that before you come to the strategy class, because I assume that you know all of that stuff in the boot camp here in the strategy course. Also in the masterclass, there's also a 5-session strategy backtesting course, which kind of goes into all the details that we couldn't cover in this class on how the engine works and development styles and that kind of thing. So that class is also available for free in the masterclass channel. So you can take a free 14-day trial of masterclass. All of these courses are available as part of that free trial. And if you spend the weekend going through the boot camp, you can certainly come and sit in on my strategy class next week all week. It's at 10:30 each day for about an hour and a half, which just depends on the content. And so I recommend that. And by the way, if you can't attend those 5 sessions, that will become a course that's available for free as part of masterclass subscription as well. So all of these assets and resources are available just for trying out masterclass for 14 days. So give it a try and see what you think. And that's what I have for everybody today. I want to thank everybody for joining me. There's my email address if I didn't get to your question. I'm going to take a look at the questions here for just a second, but just for those of you who want to sign off, thank you very much for joining. I hope to see you at another Art of TradeStation event. All of these events are recorded and on our YouTube in a special playlist called the Art of TradeStation. Each of these events typically has resources that you can download, which include workspaces and custom easy language and sometimes the PDF like I provided here. So definitely take a look at those resources. And these are all these are all really good resources to help you understand really the power of TradeStation and how you can take TradeStation to that next level. So thanks again, everybody, for joining me. I really appreciate it. And I'll see you at another event. So let me take a look at some of the questions here. And again, as I said, if I don't get to your question, please do not be offended. Just shoot me an email with that question. I'll be happy to answer that. And so as we said, this will be available on YouTube probably tomorrow with the download. So Joe, I see your question. That's an email question. I really can't show that here. I'd have to set that up a little bit. So send me an email about how to buy or sell one tick above or below. By the way, everybody who's still on, in that chat, there's a little drop down at the bottom that says add that you want to send that message to me and to all attendees so that everybody can see your questions. So, a strategy can be based on anything, but it has to be written in easy language in order for it to work in easy language. So Penny, I see your question about trading options based on the underlying asset. It's possible, but that would require obviously some custom programming. So Michael, your question, are there proven strategies? So strategies are obviously something that is created, it's back tested. We know what that back test is, and then we can trade that moving forward to see if the forward performance matches the back test. In the App Store, there are developers who have created strategies. They'll give you a trial so you can see how that performance and what that behavior is moving forward. Many of the strategy developers, their clients who are using those tools have left reviews. And so the App Store is a good place to kind of test that out and see if you find something that matches the type of instruments that you want to trade. See if you can find something that matches the time horizon or the frequency, and take a trial. And you have access to the developer. The developer, you can send him an email or call him and chat with him and see what really fits your the way that you want to trade in your style. So the App Store is a great place to look for strategies that have already been created by professional developers. So as we talked about earlier, strategies can be used on any time frame. That key reversal strategy that we looked at, though, that really that strategy is really designed for daily charts or longer term charts. I don't think that strategy it would be very difficult to refine a key reversal strategy on a 1 minute or a 5 minute chart. Peter, I see your question about Renko charts. So one of the things I did not mention at the beginning was the price-based charts like Renko and range charts and things like that. Those types of bar building techniques, Coggy charts, for example, point and figure, they do not lend themselves to strategy backtesting. You might be able to develop a strategy that generates buys and sells moving forward, but you're not going to be able to backtest it, because that, those types of bars, usually the open and close are equal to the high and low. So a lot of times the rules that you build around indicators in that environment become self-fulfilling prophecies, and sometimes to the better and sometimes for the worse. So you really can't backtest those, but you might be able to develop something that generates orders moving forward. You're just going to have to forward test that a lot to make sure that the performance and the behavior is what you think it's going to be. So one of the questions is, am I going to host that strategy trading course again live? And the answer is yes. So I like to redo all of these courses about every 6 months. So the boot camp course, the strategy trading course, the easy language strategy course next week, all of those will get refreshed about every 6 months. So you can watch the recordings in the masterclass now, but if you, in the future, you want to come and sit in on that class live, I'll probably do that strategy trading course again in the fall. That'll probably be the next time I do that. So one of the questions is about being online. I want to also just kind of answer that real quick. You can do all of this work, the back testing, everything, without being connected to the internet. So you have to be connected once, download the data by loading the chart. But then if you disconnect, you could take your laptop on a plane and do all this kind of back testing and tweaking and optimization right on the plane with the data that's loaded on your laptop. So you don't have to be connected to TradeStation to do any of this. You can do all of this offline. And one of the benefits of the way the data works is that every time you load a chart, that data gets cached locally. So it doesn't have to connect to the internet and download that data every time. So if I download 5 years of SPY, I have it on my computer and I can, go on vacation and play with that 5 years while I'm away. So I see the question about Max Bars Back. Send me an email about that and I will answer that for you. Position sizing can be dynamic. So if the strategy is doing well, I can increase my trade size. I have rules inside of my strategy that says I want to trade 100 shares, but I want to add 50% of my net profit to it each time. If I have a winning trade, I increase my trade size. If I have a losing trade, maybe I decrease it. So trade size rules are certainly part of that. So you can base profit targets and stop losses based on dollars or points from the entry price. Either of those are allowed. So Carol, I'm not aware of strategies that are based on those zones. That would be, if you're still a member of OTA, you might want to bring that up with those folks. They may be able to provide some functions or something that we could turn into a strategy. So Raza, I see your question. So definitely, if you're automating a strategy, you have to be connected to the internet. And we do not have a service where you can upload that strategy to us. However, there are cloud-based computers that you can rent. So if you don't have good internet, or you're worried about power going out, you can create a version of TradeStation in the cloud and have your strategy automate from that cloud server. And then you can just remote in with a phone or with a tablet or with a computer or laptop and control that cloud-based computer. So that might be a solution for you. Alexander, you cannot optimize time frame, but we're working on something like that. We have a tool called Strategy Hound that if you send me an email, I'll send you a test of that you can play with. But that's in the early stages of development. And Joe, you can test anything, monthly charts, seasonality, any of that can be tested. And yes, Peter, I kind of answered that before. You have to be connected in order for automation to work. So Raza, your question is, if you're not connected, will the trades happen? So the trades will not happen if you are not connected. There's one exception to that, and that is that if you're already in a trade and your strategy generates a stop order as a protection, the automation engine allows you to upload the stop order only to our computer so that you would have a stop in place. But that only works for stop loss orders for an existing position. And remember, if you lose connectivity, at any other time, other than being in a position and other than having a stop loss in there, that could be problematic anyway. But you can do that with a stop loss. So can you backtest fib retracements and Ichimoku clouds? Of course you can. So anything that's a mathematical formula that I can put into an indicator and build rules around, we can definitely do that. So Clark, the cost to subscribe to Masterclass is $59 a month. That includes daily sessions. It includes all the premium courses, all kinds of other content that we'll be adding over time. There's 50 hours of deep dive platform training in there, all kinds of great stuff. And Colleen, I'm not sure. I'll have to check on that. Send me an email about that as well. Okay, I think we're at the end of our questions for today. Thanks, everybody. It's always fun to do these events, and I appreciate you taking time out of your day to attend. And we'll see you at another upcoming Art of TradeStation. And check out Masterclass, 14-day free trial. Thanks, everybody. Have a good evening.